UBS is laying the foundations for a rebuild of its investment bank, and the job is on track, says Reuters Breakingviews. With me now to discuss this is the bank economist, Dominic Elliott, who's just got off a call with UBS. But it's on track.
It is on track, yes. I think UBS has made excellent progress. The group had about 300 billion Swiss francs in risky assets at the end of last year. Now it's down to about 258. Its target is to get to 200 by 2017, the end of 2017. So it's already halfway there, and that's just a year.
You're not giving them the benefit of the doubt.
Well, I mean, I think they're doing very well. So we'll have to see. I mean, this is the start. They've got all the foundations laid, and now it's all about whether they can execute over the next few years. They've given themselves a long time to do that.
I mean, on the other side, the wealth management side, I mean, that was a great disappointment, wasn't it?
That's right. I mean, the margins are down, and margins are how you make money in wealth management. That's partly because interest rates globally are at sort of all-time lows. So that has made it very hard for them. But they also took in less money from clients than they wanted, new money, that is.
Although the US is doing well, right?
US has been a bright spot, absolutely, yeah.
Why has the US been doing so well?
Well, good question. I mean, I think it's probably because they've managed to put to bed some of the tax issues that were surrounding them. They've been quicker to move on that than maybe some of the other Swiss banks. But, I think maybe the Swiss, it's just also a story about recovery. The US is recovering more quickly.
What again, I know we can't go into detail on this call because this was an off the record call, but what more do you believe they will do over the next 12 months to get the investment banking business sorted out?
Well, I think it's about trying to make sure they've got the right people. So they've already made some hires. They're going to try and make sure they add a few more. And they need to see if they can convince clients that actually this new look investment bank can do all the things that all their other competitors can do, but just isn't going to use as much balance sheet. And that was always the big
And do you believe
question.
it can?
Well, I mean, so far it's good. I mean, the capital markets and advisory revenues have held up strongly. Now, the bits of the business that they've cut away have obviously, I mean, the revenues there have slumped a lot, but it's not as much as some analysts were fearing, and it does look to be a fairly solid proposition at the moment.
And do you think we'll see more cutbacks in the investment bank?
You'll see a lot more staff go. I mean, to date, only a very small fraction of the 10,000 or so staff, it was about sort of 6,000 from the investment bank that were earmarked to go, have gone. I mean, there will be a lot more of those staff going over time.
So just to finish up with the numbers out this morning, yes, wealth management was a disappointment. There were bright spots, but generally speaking, you feel pretty bullish about where this is going overall.
Well, what they've done is they've got this very strong capital position, and they've only enhanced that over the last quarter. They had a good one anyway, but now they've cut lots of risk. The capital position is certainly industry leading. So that just gives them the comfort that they can play around a bit and they don't have to worry.
Okay, great. Dominic, thanks very much indeed. Thanks. Dominic Elliott from Breakingviews. If you want to watch our US show, that comes on every day, 12:30 Eastern, 17:30 GMT. You can read the full UBS Breakingviews story on the Breakingviews website, of course. I'm Axel Threlfall. This is Reuters.